loans. The Federal Reserve is committed to improving consumer protections and ensuring responsible lending practices through each of the roles we play, as supervisor for safety and soundness, as supervisor for consumer compliance, and as rule writer. Let me first address the steps that the Federal Reserve is taking to combat mortgage fraud. In recent years, there's been a significant increase in suspected mortgage fraud and other mortgage-related criminal activity. Federal Reserve staff regularly reviews suspicious activity reports filed by the financial institutions we supervise. In appropriate circumstances, and particularly when bank insiders may be involved, we initiate investigations, make criminal referrals, coordinate with law enforcement and other regulatory agencies, and pursue enforcement actions against individuals, including seeking prohibition orders and, in appropriate cases, civil money penalties and restitution. We are currently pursuing numerous investigations involving insiders related to possible mortgage-related fraud, both commercial and residential. More generally, the Federal Reserve's enforcement efforts begin with the examination of its supervised institutions. In the Federal Reserve's regular safety and soundness examinations of state member banks and bank holding companies, we evaluate their risk management systems, financial condition, and compliance with laws and regulations. In assessing a bank's risk management systems, examiners evaluate the adequacy of the bank's practices to identify, manage, and control the credit risk arising from the bank's mortgage lending activity. Examiners look at the bank's underwriting standards, credit administration practices, quality control processes over both its own originations and third-party originations, and appraisal and collateral valuation practices. Institutions with weaknesses are expected to take corrective actions that include improving their underwriting practices in the future. In those instances where the bank is not willing to address the problem, we have and use a full range of powerful enforcement tools to compel corrective action. The Federal Reserve conducts regular examinations of state member banks to evaluate compliance with consumer protection laws. Each examination includes an evaluation of the bank's fair lending compliance program. Our objective is to identify compliance risks at banks before they harm consumers and to ensure that banks have appropriate controls in place to manage those risks. When examiners identify banks with weak and ineffective compliance programs, they document the weaknesses in the examination report and take appropriate supervisory action. In addition, when examiners identify patterns or practices of lending discrimination, the Federal Reserve makes referrals to the Department of Justice as required by the Equal Credit Opportunity Act. Furthermore, Federal Reserve consumer compliance examiners routinely participate in the review and assessment of the adequacy of large bank holding company compliance risk management programs. In addition to our supervisory activities, in 2008, Federal Reserve Board finalized sweeping new rules for home mortgage loans to better protect consumers and facilitate responsible residential mortgage lending. The rules, which amended Regulation Z, prohibit unfair, abusive, or deceptive home mortgage lending practices. Importantly, the rules apply to all mortgage lenders, not just to the depository institutions supervised by the federal banking and thrift regulators. The rules apply to a newly defined category of higher-priced mortgage loans secured by a consumer's principal dwelling. The higher price thresholds would cover all or virtually all of the subprime market. For these loans, the rules will prohibit a lender from making a loan without regard to the borrower's ability to repay the loan from income and assets other than the home's value. In addition, lenders are prohibited from making stated income loans and are required in each case to verify the income and assets that they rely upon to determine the borrower's repayment ability. Again, I want to thank you for the opportunity to discuss what the Federal Reserve does to address and prevent mortgage-related fraud and abusive lending practices in the institutions we supervise.